Hey, I'm Bill Fanter, founder of Options Action, and you're watching the weekly watch list. If you'd like to get access to this content before it goes live on YouTube, just hit the first link in the description to sign up for our free weekly emails. All right, let's jump right in. Hey, welcome back, everybody. So this is going to be the watch list for Monday, July 7th. So from an overall U.S. economic report this week, it's a fairly light schedule, but there's going to be some things that you're going to want to keep your eye on. So first and foremost, let's just run through this week's agenda. Monday, we have nothing scheduled. Tuesday, we have the NFIB Optimism Index. That typically doesn't really move the needle one way or the other. And then Wednesday, we'll see where we're at with wholesale inventories. And most importantly, the Wednesday leading up into the FOMC meeting minutes can get a little choppy because what the market is looking for is what did Powell and the Fed governors actually talk about that they didn't tell us, right? And so they're going to try to read into the FOMC meeting minutes, but by then, hopefully you're done trading for the day and it will be a moot point. Going into Thursday, we have initial jobless claims. And then we have a couple of Fed governor speaks. Now, the interesting thing with initial jobless claims is somebody's lying. Okay, so ADP said we lost over 30,000 jobs. U.S. government comes out with its unemployment numbers and said, oh, employment went down and we added well over 100,000 jobs. So who do we believe? Do we believe the U.S. government's numbers? Or do we believe private payroll, ADP, that controls, well, pretty much every person's paycheck around the United States? Not pointing fingers, but something is wrong with the data. Okay, so keep that in mind. That's Thursday. Beyond that, Friday, monthly U.S. federal budget. Well, we know that's a train wreck. And that just went up by another $3.5–4 trillion. So, with the big, beautiful bill. Now, a couple of things that we're going to want to definitely keep an eye on is that tariff talk is back on the table. So July 9th is when all tariffs were supposed to be resumed with the prior commitment dates, as well as structure. The administration came out and said, well, we're going to put everybody at 10%. Now the administration has now come out and said, no, we're going to go back to the April numbers for anybody that doesn't have a deal in place. So a lot of back and forth and knee jerking around as to what is going to happen on a go-forward basis. Nobody knows. But right now, the market could really pretty much care less, right? So let's take a look at SPY, new all-time highs. Do note that we have a gap, and I only do gaps on the daily time frame. For me, those are the only ones that are relevant. So you can see we pushed up to an all-time high of 620, 628. I would love to see on Monday for us to at least come down and fill the gap. Now, mind you, gaps will fill 80 to 90% of the time. The question is, how long does it take? But the one thing you don't want to be doing is trying to short this market and trying to determine, well, where is the top? Because if you've taken puts anywhere over the last couple of weeks, for the most part, unless you took them, let's see, right here on Friday, June 27th, you got smoked, right? Because when you're going into puts, and even though the market is marginally dropping, the premiums aren't moving. Why? Because everybody's buying the dip for calls, buying the dip for calls, buying the dip for calls. They especially bought the dip this past Wednesday and Thursday before the 4th of July. I mean, it was a short trading day on what was that, Thursday? And the market just caught fire and there was no stopping it. Okay, so let's take a look at QQQ. And a lot of this has to do with a broadening out of the market, right? So they're moving more into consumer cyclical. They really rallied the banks hard and fast. I talked about that last week, right? Watch and see what the banks do. Well, the banks caught fire last week, and therefore there was no stopping SPY. Oil caught a bid, airlines caught a bid. I mean, pretty much it was risk on. Now, taking a look at the Qs, what really drove the Qs higher? Well, that was pretty easy. Apple. Apple came to life on the premise that it was going to use OpenAI or another third-party platform for their AI intelligence to work with Siri. Okay, so we're going to look at Apple in a moment here. But again, we do have a gap down below that I would love to see us at least backfill into this 550 before we resume higher. Again, I would not be trying to short this, nor do I really like to go long once we break above the all-time high. We just don't know what news or what sentiment's going to come out that could cause this to reverse. So instead, consider playing some individual names. So as I said before, Apple, this was the discussion on Monday the 30th, where it came out that they're looking at OpenAI to possibly integrate that with the iPhones and with Apple's hardware, and the market ran. And so where did it run to? It ran to the bottom of the gap fill that's been sitting out here. So now what would I look for? I would definitely look for this gap to fill higher. I would not want to be buying puts on Apple unless they come out and said, nope, we decided not to do that. We're going to develop everything in-house. But definitely look over the next week or so, maybe 2 weeks, for this gap to fill all the way up to 221. Okay, we have no resistance now until 222. So I do like the long call trade for Apple. And if the market is strong, you're going to probably want to swing those things and not cut them short. Let's take a look at Amazon. Amazon also had a fairly decent run. This was going up into Jeff Bezos's wedding, right? And they just rallied this thing hard, and then they sold it all the way back off to our price level of 218.35. Then there was an announcement that a lot of insiders were selling shares. The one thing you need to understand is that when insiders are selling at the executive level, those are planned sales. Those sales are not done on the spur of a moment because of where a stock is trading price. So when Jensen Huang is selling NVIDIA, or Jeff Bezos is selling Amazon, or Tim Cook is selling Apple, they have these predetermined sales that are already in place for months, if not quarters, way in advance. So whatever the stock is at is what the price gets sold at. Whereas so many people are like, oh my gosh, something must be wrong, right? If the owner is selling, then I should probably be getting out, or I should be shorting the stock. That's not how you need to think about executive plan sales. It's just a moot point in time that it will draw down the liquidity in the stock, right? It'll put more shares on the open market because they're selling their position, but it is also a catalyst for you to look for a pullback to potentially go long. So I'd like to see Apple come down to the base here around 221, maybe a little higher, right in this range though in demand, to possibly push higher back up to 225. Now you will note that we still have, a lot of room to the upside as to where this thing was up at 240. Now, mind you, it is hitting this resistance right here at 225.18, which is not only a price level, but it's also the 786 fib level from the all-time high to the tariff low. So I would not, again, be shorting Amazon. I'd be looking for a pullback to come back down here, ballpark right around 221, 222, to potentially go long. Let's take a look at Tesla. A lot of news on that one as well. Great opportunity in both directions, right? We get down here to this magic 300 number, and they just love to bounce it higher. So they ran it all the way up on robo-taxis, then they sold it off. Now Elon Musk has now officially started his proxy to start a third branch, if you will, of the legislative party, right? Not Democratic, not Republican, but it's going to be now Elon Musk, and he is the world's richest man. So how much money is he willing to throw at this to outseat Republicans, right? I don't think he's got to worry about the Dems at this point in time. They're kind of struggling just to figure out directionally who's, leading the party and who's going to be the next presidential nominee. But don't be surprised if Elon starts to sway a lot of unhappy Republicans who were forced to vote for the big, beautiful bill. They were strong-armed because the president clearly came out and said, if you vote against this, I will make sure that you are destroyed in the midterm elections. And then he was signing merch, that was produced in China. Some of the House members, walking away with smiles on their faces. What a disgrace. But anyways, I digress. So anyways, Tesla, potentially, if we break below this 311,
will head lower down here to 307, back into overall demand to go higher. So I really don't like the call trade, but probably the put trade will be of preference. Let's take a look at NVIDIA. Chips have been super strong over the last couple of weeks, right? Leading higher, beating the S&P. So again, we are now at all-time highs in NVIDIA. I don't like calls unless we can pull back into this range of this 158, give or take. Ideally, the best place to take calls is going to be down here at about 156, okay? So be patient on this one. I don't think there's any need to change it. Chase it, I guess I should say. Now, the interesting thing too, NVIDIA doing remarkably well, but what is rolling over? AMD. So over the last couple days, AMD has had a hard time gaining traction. This one I actually like for a put trade, right? If we're now up here where the sellers are, I'd love to see us come back down to 132. So we'll watch this on the market open. If it gains any relative strength or weakness, to say, what are they going to do with this thing? But we're not even at the 50% fib from where we were at on Wednesday, all the way up to Friday's high. So I'm definitely looking for a pullback here. Will they bounce it to resume, or will they fail it to go lower into demand? So keep an eye on that. The other thing in the big, beautiful bill was that casinos, I think, are going to be dramatically impacted. So the law around gambling, profit and losses has changed. So in the past, if you had a $100,000 gambling gain, and then that same year you took a $100,000 gambling loss, it was a complete wash, okay? Well, the big, beautiful bill changes that. So you are going to be taxed on your gains, but then you can only now write off 90% of your losses. So what does that mean? Well, if you make $100,000 gambling at the casino, and this is really going to apply to, high stakes poker, right? But it's going to have an impact on all gamblers, not just poker players. But just hypothetically, if you win 100 grand, okay, and then you lose 100 grand, you can only deduct 90% of the losses. So even though you're break even, you still have to pay 10% of the win with taxes. So even though you lost money, you're still going to pay taxes. Or you broke even, you're going to pay taxes on the winnings. They no longer offset one another. So I definitely want to keep my eye on the casinos. WYNN looks like a good short here below 105.40. Even though we're going to press into some overall demand, this is treating this more like a news event, right? Are they going to be able to catch a bid to run higher, knowing that this is going to put a damper on overall gamblers? Okay, so let's look at the other one, Las Vegas Sands. Same thing here. We break below this 47.72. We really don't have any buyers down here till 46. And then they really start to get scarce until we get down here to 42. So this one, again, another one, if we have weakness on the market open, that I definitely look for a potential put trade. Now, these things have been going dramatically higher because of Asia and Macau. But what we'll have to wait and see what happens is the U.S. market, and specifically the Las Vegas market, going to be dramatically impacted, as well as Atlantic City, as well as the online gamblers. So let's take a look at Draftkings, right? DKNG. This is another one, really kind of struggle bus here, not doing anything monumental. We do have a gap fill below on the daily that I would watch. And if we could get below $50.50, definitely I think puts coming down here into $39 or $38 would make a tremendous amount of sense. So I'm going to keep Draftkings definitely on my high watch list for Monday morning. Let's take a look at a couple of the other high flyers. Palantir, this one, again, making last week new all-time highs. Little bit of a drawdown. We will want to watch how the big, beautiful bill impacts this, which Palantir is a huge recipient of the overall government spending, right? And now the armed forces and that whole division has gotten a tremendous amount of money for immigration reform, for building the border wall, for using technology and AI and finding people in order for Trump to stay on his mission of deporting it's not 100,000, 1 million illegals annually. Okay, so Palantir, just on the news event, knowing that it is all based on government contracts, will probably catch a bid higher. Could be significant, right? So let's keep Palantir. And then the other one to watch is going to be Coinbase. So Coin, if we just take a look at this one, also, where are we at? It is from this pivot high to this low, is rejecting this 50 fib. But what I can tell you is that when we reject a fib and then we retrace right back to it, that is typically going to be bullish. So what I would look for is a reclaim of the 50 to the 618, which is called the golden zone, for us to go to 368 up to the 786 fib, and then ultimately back to the high of day. So we'll be able to watch this one with Bitcoin and watch what that does over the next 24 to 48 hours. I did cover all the banks last week. I don't like any of them. There's no trades in the banks. So just keep an eye on these, but they are making new all-time highs on literally no news. I don't have a reject. I don't have an area that I would like to buy them. They will start to announce earnings in a week, so I would probably just steer clear of these for all intents and purposes. I would not be chasing these prices here on these valuations. They don't make any sense from a price to tangible book value, nor the fact that they've increased their dividends because they all just passed the stress test with flying colors. Now, I know Flint does have a trade on with US Bank that I think he said he would exit if it dropped below $47. It's running into some resistance here, and the regionals are kind of your catch-up trade. So if you're going to follow Flint on this one, just be careful. Obviously, a better entry is going to be back here at 47.15. We're trading at 47.82. We are hitting some resistance, and then you can see on a 1 hour time frame that they're kind of struggling to push this higher. But one that I think could possibly pan out, but what I don't like with banks is they should not be moving like tech companies, right? So this is the sector rotation where they are literally flowing into all the underperforming asset classes, okay? A lot of resistance above. We do have a gap. We have earnings coming out. Let's see, US Bank here is going to be on the 17th, so you still got a whole nother week to wait and see what happens. But I think what's going to be really driving the market this week is where do we stand on tariffs? What are we going to do on July 9th, which was the implementation date, if I'm not mistaken, for all the countries around the world to start graciously paying us here in the United States. So guys, a lot of news. I try not to have a bias, but you got to trade what's in front of you and just don't fight the trend. So with that, if there's any questions, feel free to reach out, shoot me an email, let me know. I'm happy to answer them. And if not, I will see you all tomorrow morning at 6 a.m. Pacific Standard Time for some live trading. With that, have a great Sunday. We'll talk soon. Take care.
Thanks for watching. If you haven't already done so, make sure you sign up for the free weekly watch list emails to get early access before the video drops here on YouTube. See you next time.